TGIF Warriors. Hello, Luca, Glenn, Patrick, Satish. How are you, Ziggy? Wojciech, Vlad, Tomas. Nice to see you, Tomas. Haven't seen your name in a while. William, what a week. Okay, so I want to start off with what I talked about yesterday and a lot of agreement with the team. So we were up here yesterday. I said, do not chase dollar strength. We could pull back at least to 92. We've gone to 91.80, just eyeballing it. I think that we're about, this was 78.6 back. So we could rally from here. If you're a dollar bull, we start taking out 91.80. I think we're going to new lows. 92.20 is going to offer resistance. So I don't initiate a lot of new stuff on Fridays. I don't recommend initiating a lot of new stuff on Fridays. See what the weekend will bring, but definitely you could look at it both ways here. So the euro, same type of situation as the dollar, although it's fading. Very nice recovery. Are we going to take out this high? Sure, giving people, making it convenient if you miss this big spike to get short close to the spike high with stops over this high. And I said that there could be a pullback in Guppy. That's beginning to happen. We did diverge up here at that new high yesterday. Similar scenario in Euro Yen. Euro Yen made a new high. A glaring divergence. I would not be long Euro Yen. Everyone with me on my analysis so far? Give me a Y if you're with me. Okay, there's a few other things I want to talk about. I talked about outright yen shorts most of the week. Finally got the high yesterday. And we were down about 70 pips. This looks vulnerable to me, this type of recovery. So what is today? Anyone know what today is? I think it's the equinox. Okay, so welcome to fall. I know that I talked about the equinox. Yeah, talked about it for a while. So I think we have a high in the end for at least a correction. I think under 110 is possible. I think that the S&Ps, Anna was negative, NASDAQ. I think S&Ps have topped too. We're now a little bit lower on the week. Day before the equinox. So on these seasonal events, you have to give it a day or so on either side of it. So I'm betting hundreds of you now will start paying attention to the end of the season for possible market reversals. Is that a good guess? Because most people don't think about it. So now you have something else to put into your toolkit. I know it's only 4 times a year, but pay attention to the change in seasons for a potential reversal in market direction. And I also want to talk a little bit about, before I TO it to Blake, yesterday's executive order putting pressure on North Korea. Anyone who does any business with North Korea now, we know that China does, 90% of it's with China. China said they're going to go along with it. If countries don't, they're going to be sanctioned from the world financial system, the dollar system. And actually, I don't think it's such a great strategy, because we should be encouraging people to stay in the dollar system with all the advantages that the dollar has for the U.S. as far as it being a reserve currency, because I think China may go along with it for a little bit, but perhaps their smaller banks don't, and as soon as it starts costing China, they won't. And it could lead to the mother of all currency wars. Also, the Chinese and the Russians have a plan B. They planned for this threat. They have their own SWIFT system. It wouldn't be a smooth transition, but they do have backup. And I actually think that this political policy can lead to a very negative economic circumstance if that happens. So I think we have to be aware of that now, that there is a possible, we're hearing more and more about de-dollarization. Well, nothing would, like Steve says, there has been gasoline all over the floor, and this could be the match for, you know, a very negative event in the dollar. So if you're not aware of it, it's out there now. I think it's something you have to take into consideration. Of course, it's not going to tell you where to buy the euro, sell the yen, etc. But I think it's a very important development, especially being currency traders, that we have to monitor how long this is going to work. And that's really about it. I think that we have potentially at least a correction coming in S&Ps. If you look at the weekly, we're on the verge of a weekly reversal. Very tiny candle so far. 2-week off numbers all the way down here. I don't think that we'll get that. It's all the way down to 24.62. That would be a pretty negative Friday. So I'm going to give the Equinox the benefit of the doubt in the S&Ps and yen crosses for at least a trade. That's where my head's at. How are you, Blake?
Hi, good. I'm just busy being a dotard.
What's that?
You missed the news last night? Yeah, oh yeah. My god! Oh my god! It's so funny. So you missed the North Korean news when North Korea responded and
yeah, I heard the news, but is that what he called Trump, a dotard?
A dotard, and I sat there and it's like, what the hell's a dotard? And I guess like the whole searches of dotard went like crazy after after his response, and it means like I guess the translation is old senile person's gone crazy, or you know, something like that.
Okay.
And so it's like I'm gonna run around called dotards all day. It's you know, it's like a new fun word to use. But you know, interesting thing is, if you think about it, like it so much attention last night. And look, you know, it's scary. You have to sit back and laugh a little bit. At least I'm trying to, you know, laugh about the situation a little bit. It's obviously very tense and scary situation, but you've got, you know, two leaders that are throwing, you know, words and names at each other. You know, he just called, you know, Kim Jong-un a rocket man, and so the rocket man responds with calling, you know, President Trump dotard, and frankly, I mean, I have to look around and say, Kim Jong-un wins, you know.
Yeah, you know, yeah, we're in a situation where maybe no one will win. So, you know, I really think, you know, that's the biggest risk. But what do you think of that executive order that we're going to sanction anyone who does any kind of business with North Korea from the dollar system? And I think that's a big deal.
Well, you know, it could be. Maybe one of the reasons why the dollar's one of the many reasons why the dollar is having a very difficult time right now. Yeah, I'm not too sure. I'm more worried about like an escalation like over the weekend and what it could possibly mean for the dollar. Hey, am I sounding laggy right now? Like, am I breaking up a little bit? Okay.
Yeah, you sound okay, bro.
Okay,
you are lagging pretty consistently, but not a lot. So you know, we can hear you, but you know, it's a little bit laggy, Blake.
Okay, it must be that I didn't feed the gerbils this morning. That could probably be it.
Are the kids near PlayStation or something?
Yeah, at 5 in the morning, no. No, they are not. And they don't play while I trade, so that's the bottom line. So, you know, I guess since I sound a little jittery this morning, I want to talk about a couple of things, Dale. And we have Theresa May, who is in about an hour to an hour and a half. It's tentative, but it's everybody says it's about an hour to an hour and a half from right now. She's going to be, you know, addressing or having a speech on her about her, you know, about Brexit, and she's speaking about Britain's, you know, relationship following Brexit with the EU, and she's speaking about it in Florence. So we don't know what to expect, but I'll tell you, I tweeted about everything this morning, just so you guys, anybody, if you're not, if somebody's not listening, and they pretty much got my thoughts, but it's something that I need to talk about this morning. It's so massive. So this is, you know, the pound dollar, and this is, as you guys can all see, this is a multi-year trend line. I mean, you go from like the highs of 2014 to the spike high fall. That's the night of Brexit last summer, right? Yeah. And then to the highs right now. We're also at 161% extension of the last leg lower, and we're knocking our head up against 136. I don't know what she's going to say that can break it out. I don't, but something could be said. You know, whether it's you know, if it's pro UK, you know, whether the penalties following Brexit are going to be much less than the market expects. Maybe they've moved up the timeline, and people already are so short the pound that it, you know, causes people to cover, you know, the buy the rumor, sell the news type of event. I don't know. I mean, I don't know. But what I do know is that we are up against really major resistance here. Now, from a risk-reward standpoint, Dale, it makes sense to short the pound right now. Now, I'm not doing that. I'm just saying, like, if it was a normal, if it was just, if it was like the Aussie dollar and there were no data coming up, I would look at the, you know, I'd look at it and go, oh, I'm going to short it right now. You know, like if it wasn't such a big speech and it wasn't because of Brexit, I would be looking at the pound saying, this is a perfect setup. I'm going to short it, and I'm going to put my stops, you know, above the recent highs. Obviously, that's not the case, so I'm not going to be shorting the pound. But what I'm telling you guys is that if you're short the pound, and I'm not doing, I like to explain to people, I'm not a brain surgeon, obviously. My IQ is no higher than average, okay? And
you're not a dotard.
I might be slightly dotarded. I actually, but I'll tell you, everybody's looking at the exact same thing we are. And if you look at like the lows from 2008, here we are right at those that price basically. I mean, you know, give or take, you know, 100 pips. We have a 50% retracement on Brexit there. If we break these highs, we can see 138.50, which would be this blue line right here. Yeah, I think we could see that like between now and Monday, realistically. And so if I was short the pound, I would be shaking in my boots right now. I mean, there's no if and or buts at this point. I would really, you know, just be, you know, nervous. And if you're long, you know, it's a very scary place to be long too, because you can have epic fail here. I mean, you could, and I think anybody that's short the pound knows that. You know, you know, you could have a massive failure here and go all the way back to 133, and you know, and anybody who's short's going to just cover their positions from there. But I think it's important to note how big of a level this is. And do I want to get long the pound? I mean, if it breaks highs, whew, sorry, excuse me, I didn't mean to yawn on you guys, but if we can close above these highs, I'd have to imagine I would, if I'm not long, I can tell you one thing, I will not be short. So that's the one thing that I can tell you guys. I'm not sure how I want to trade this. It's you know, we're getting towards the end of the quarter. We got 1 week left of this quarter. You know, for a lot of people like me, I don't want to screw up my quarter, so I'm being a little bit more picky about what I'm doing at this stage in the game. But I'll tell you this much: if we break above those highs and we close above those highs going into the weekend, I would not want to be short the pound. You know, and that could tell you, you know, something. You know, if you're bullish or you're bearish. Because I think the pound could really squeeze. We all know that the positioning is very short the pound, and it has been since Brexit. I'm sure there's been some covering of those positions over the last week. We'll find out later today, all the data up until Tuesday. But realistically, Dale, this is something that could squeeze the crap out of the market. And so this is number one on my radar today, is the pound.
Okay.
So that's number one. Yeah, number two is the Canadian. Now let's talk about positioning here. The positioning in the market is actually skewed towards, you know, there are a lot of Canadian dollar longs. So this is moving lower in the direction of the positioning. So we could actually get a pretty steep reversal should position flip, or, you know, the longs get scared. But I will also say that we are below a multi-year trend line in the dollar Canadian that has been, you know, in place since 2012. And as you know, I've written in our analysis every night. You can even read it last night, the US dollar Canadian, and this is last night's analysis. The dollar Canadian is still struggling with the underside of the long-term broken trend line, which comes in at 124. And while below this level, the bears still seem in control. Tomorrow we have Canadian retail sales and CPI, which will be a market mover, and that's obviously this morning. But last night, you know, that wasn't last night. Last night we were trading at 123. We were trading at 123.25. You know, we were just testing the underside of that trend line again. And by the way, that is a gravestone doji on the daily chart. So, and you can read over here on candlestick analysis, the dollar Canadian registered a gravestone doji, which is a bearish reversal. That was last night. That was 70 pips ago, or, you know, 50 or 60 pips ago. So guys, I just want to point out that you have to be very careful about this dollar Canadian while it's below this dotted line. And I would call that dotted line, or dash line, or the bull bear line. That means while it's below 124, being bullish is scary. And you know, the dollar Canadian, it's got this channel, and we've got data coming out, and I don't have a position on the Canadian right now, but because, you know, we're right here on support. I understand positioning is kind of skewed, so it could bounce no matter what. But the Canadian data comes in strong, we could really be back at 121 without much of an issue. So that data is coming out here in 10 minutes, and so we're probably getting some answers here in just a few minutes about Canada. So anyway, just that's what I'm paying attention to in Canada. I think, and correct me if I'm wrong, Theresa May is not speaking for like another hour. Everybody says it was 2 o'clock BST, which 2 o'clock BST is in 40 minutes from now. So anyway, Let's see. Let's say I have the Canadian I wanted to talk about, and data is coming out in 10 minutes. We'll take a look at it as it's breaking. If you look at the euro, one of the other big things here about the euro is, we're following up this massive trend line here in the euro dollar. There's no reason to be short this thing yet. I mean, it's just in a bullish trend. Yeah, what's up, Steve?
Blaker, I think she speaks in 6.5 hours from now, if I'm not mistaken. 6 hours and 40 minutes from now.
What?
Yeah, I think it's quite later, actually.
Oh, the May speech. The May speech.
No, I thought it said 2 PST. So what?
Let me confirm, but I'm pretty sure that it's my time.
You're very soft, Steve.
Ah, sorry.
Yeah,
I'm pretty sure that it's my time, night time. Stelio, isn't it 10 o'clock p.m. our time?
2 p.m. British summertime is 6 a.m. That's 40 minutes from now.
I think some sites like investing.com have it at 10 p.m. Have it in like 8 hours or 6 hours from now, whatever it is. But I think it actually is 2 p.m. British Standard Time, so in like 40 minutes. And remember, this is in Florence. This is in Florence, so it's not going to be at.
You're right.
9 p.m.
Correct.
Local time.
It's mistaken here. Okay, then the calendar I'm looking at is, has it?
I think it's wrong. Yeah, I was fooled.
Okay.
You guys are all fooled. You guys are a bunch of dotards. I still cannot get over how funny that word is, and it's like I saw a chart on the spike of Google searches of dotard, because I was like, dotard, that's a new one. Did he make up that word? I was thinking that last night when I read it, because I happened to be in front of my computer when that happened. So anyway.
What is completely not funny though, and I think you mentioned it, is the extent at which the level of politics has degraded, both on a national level in the vast majority of the countries, and on a global scale. Yeah. And I'm afraid this is not going to end well, honestly. I mean, it's like the maturity of politicians has steadily degrading since the end of World War II.
Yeah,
but
it is.
But we've now reached like retarded levels, if you ask me.
At dotarded levels.
Yeah, dotarded.
Yes.
Dotarded.
Correct.
Levels, yes.
Yes. I know it is scary. Hey, one last thing. I guess I wanted to talk about this euro yen. I had it's actually quite frustrating. I had a pattern in play, knowing that we were going to come up here, and it triggered like within a couple of pips of the highs, the trigger level. But the reason I want to point out the euro yen is we have German elections that are this weekend, right, Steve? On Sunday.
Yes.
And so and Axel Merck is going to win, right? Just joking. I mean, joking. So we all know who the winner is.
Yeah,
I'm totally joking. But Angela Merkel's obviously going to win. Everybody knows that. But and this is all a given. Everything that possibly could go right has been priced in, and there's nothing that in my opinion regarding the euro that is priced in that could go wrong. So when you have the euro yen up at this major resistance up here, you have the German elections on Sunday, which we all know what the outcome is going to be. So the buy the rumor, sell the news type of event is potentially there. And then on top of that, you've got you've got a weekend that who knows what could happen, what words could be slung, or what worst missiles could be slung, around over the weekend. And then you have a euro yen, which is a good risk barometer. So I think there's a lot of risk to the euro yen at this point. And I'm personally I'm looking shorts today. I don't know. I've already scalped it a couple of times to the short side and made a few bucks, but I'm actually looking to re-short this position here personally, and I'm just trying to figure out where to do it and hoping we can get a good price at some point. is my thought process. So anyway, just some ideas ahead of this Canadian data dump that we're coming up on right now. So we have CPI and retail sales, which is going to be obviously a bit of a market mover for the Canadian dollar. I have no Canadian exposure. Steve or Stelios, do you guys have any thoughts ahead of this Canadian data?
Not really, but as you're showing there, still no confirmation of of a serious correction. And as I've said plenty of times, unless we close above 124, I think there is absolutely no bargain to be made alongside. Let's clear that first, and we see. Now, having to do with the macro data, Stelio, I don't know. Do you expect something specific?
No, well, my view has been bearish dollar CAD since the first hike, basically, and that's been reflected in our ForexAnalytix analysis and all that. The bias is bearish, and I still stand by that because nothing has materially changed. And in terms of the numbers, I don't know. CPI is an important number, obviously, and retail sales. We have to see how it goes. I don't really have a view on if it's going to be strong or weak. But
I think, Stelio, that the CPI is expected to overperform in the sprint, and the retail sales are expected to drop somewhat. Yeah. So obviously, if CPI disappoints, is going to be currency negative. But on the other hand, if retail sales do not end up disappointing, that's going to be a good indication for another strong GDP print. So I'm guessing we're going to see a CAD positive reaction.
Yeah, I think unless we have a big swing in these numbers, the main picture is still bullish CAD for me, as far as I'm concerned.
No, but do you have anything to say about positioning, though? The positioning is very, very, obviously bullish.
Oh, yes,
I mean, the sentiment is very strong Canadian right now.
It went right where you guys wanted to sell it early in the week.
It actually, the stupid thing is I actually shorted the dollar Canadian at 123.82.
Yeah.
Right here. Yeah. And then I closed it at 65. Yeah. That was a great trade. That was an awesome trade. I made 12 pips when I could have made 150. Yeah, that's awesome. Or
anyway, your area and your area was excellent. So execution.
Execution was shoddy at best. Yeah. Shoddy at best, and
hey, you know what? Next time, take half, Blake.
It was moving so fast at that moment, it scared the crap out of me, honestly. And I think telling stories to people like that, so you guys all understand that I am human, just like you. I don't. Yeah. I get scared, and I was, I got triggered in a pretty hefty position, and I'm like, oh, I better just my profits really quick. And I look back and kick myself in the rear end. I try not to dwell on it, but it's like, oh yeah, I had a great price there. It's like, man, I called it perfectly. But obviously the difference between calling it perfectly and trading it perfectly. And so I called it
easier
perfectly.
To call it easier to.
Yes, I mean, making calls in the market is super easy. Trading what you say or trading what you call, that's a different ballgame. That's what separates the men from the boys or the women from the girls. I think
because there's money on the line. That's what changes it.
Of course. Oh, absolutely. So anyway, we have data coming out here in just a few minutes. I'm sorry, Steve, what were you saying?
And that's also what separates analysts from traders.
True. That's a good point, and it does. That's why I don't read. I read a lot of analysis just to kind of get a feeling of what the market's thinking, and so I have a couple of smart talking points. But I don't usually listen to analysts and their projections, especially. So anyway, here, the Canadian data is coming out here momentarily. Again, I don't have any
There you go.
Exposure. Wow, it's weak.
$8 positive.
Weak. Well, Canadian negative.
Weaker.
Yeah. Yeah, CPI came in weaker than I expected. But look, I mean, okay, you know, the good news is, if you guys want to get long, know where your risk is. Look, it's channel support. This is an hourly chart. This is a perfect channel. Perfect.
But
you got two drives on the hourly. You could get one more.
Retail sales beat expectations, on the other hand, that which points to a high GDP print for the third quarter as well. So it's mixed news, actually.
It is, but you know, I probably enough to scare some dollar Canadian shorts at this point. So look, if you decide to get long, and I'm not even trading it. I'm kind of staying away at the moment. But this is your risk. And that, as a trader, that's the only thing that you can do that's within your control, is know where your risk is at all times. And so, which, you know, it's interesting. We started opening up the chat room to a lot of traders, and you know, we have a lot of new traders that have come in, you know, for ForexAnalytix. And if you guys don't know how to take advantage of that offer, Steve and Dale and Stelios can talk about it as well. But the one thing I wanted to point out is, in this chat room with all these new traders coming in, a lot of questions have been asked. Hey, Blake, or hey, Steve, or hey, Joe, or hey, you know, whoever is in a trade, what's your target? You know, and I always tell people, I'm not so concerned with where my target is. I'm more concerned with where my risk is. Like, if I looked at the dollar Canadian and said, what's my target? I would think maybe 123.50, maybe 123.70, maybe 124, maybe channel highs up here at 124.40. But I know where my risk is. That's for sure.
That's the one.
My risk is, yeah. That's the one question that you need to ask yourself first and foremost, before you get into a trade. What am I going to risk? As long as that's defined, you know, because I like to keep my targets semi-open, because you know, you don't know what, you know, can transpire. You know, maybe you get in the dollar Canadian and you target 123.50, but all of a sudden a big wave of dollar buying comes through the entire market, and you're like, shoot, I can now target 124, 124.50, and you kind of take it as it comes, as the market is, you know, moving in your direction. But your risk should always be defined initially, and you should always know where's your threshold for pain, and where do you need to get out. Risk, that's your number one question each and every time. And it's interesting, because I saw with so many traders this week, it was just an observation I made. I didn't say anything, but it's an observation that I made, because that illustrates to me that most traders still are not thinking what they should be thinking initially, is what's my risk, period. Okay, but anyway, I'm going to pass it over to you guys, because there's a lot of crosses you want to talk about. I'm sure you want to talk about all these pound crosses, Steve and Stelios. And Stelios made a comment this morning. He goes, I'm so bullish the pound, I got to control myself. So I'm sure the market wants to, or our listeners here want to hear what Stelios means by that. I just threw you under the bus, man. So
thank you.
Hey, you know what?
No,
you've been on it. You've been on it since no one, you know, everybody was looking the other direction. So kudos to you.
Well, thanks. I mean, nothing major before you start this, Steve. I'm just going to say, you know, nothing major has changed in my view in sterling versus most currencies, most crosses. Obviously, May's speech today, I'm thinking about that. What can she say that we're not expecting? You know, I think any surprise, in my opinion, can only be a positive surprise. So, because everything I read, every commentary, everybody's saying, oh, they don't know what they're doing, you know, the UK is in trouble and this and that. I'm not convinced. You know, it's a difficult situation. They have negotiations to go, you know, that are gonna be happening over years. But overall, I just think the market has gone way too far. The UK economy is still doing okay. You know, the same stuff I've been saying for weeks and months. And on a, you know, taking a step back, I think the pound is still bullish. and I'm sticking with my positions. I have two trades.
The recent move has proved so, Stelio, and I think that, yeah. Go ahead, Blake. Sorry, I didn't.
Oh no, I was just going to say one last thing. But because the pound is at such a critical technical juncture, does it make sense to somebody like yourself who is longer term bullish? Does it make sense to book some profits, move stops to break even, take some off the table, be proactive? Because the way I look at it is when you're in a position where like for example, I know the pound breaks out above 136.50 or whatever it is. If I got it at 132 and I'm like, okay, well, if I take off half right now, my risk at this point in time on if it continues higher is missing a little bit of upside, because I can always re-enter back in when I can confirm that it's breaking out. So that's I guess what I wanted to ask you is.
Yeah. That is a very good question, and that's a prudent thing to do. I agree with your level on cable. I'm actually no longer long cable. I'm only long sterling against euro and Kiwi. So if I was long cable, I would be taking some off now. So the rest, ForexAnalytix subscribers will know, I have moved my stops to break even for the euro sterling short, which is 0.91. And I've moved my stops for sterling Kiwi a little bit higher as well, so to break even again. So I think it's wise to take some off when it's going your way. I just feel this is one of the rare occasions that I feel very, very strongly about it. So I'm a little bit more, let's say, aggressive with it. So
Money is asking, by the way, Stelio, so we don't lose a question, why are you so bullish sterling, and what trading methodology do you use?
I'm gonna let you answer that question, but I've got to step out. So you guys, hey, TGIF, and don't forget to mention to our traders about the special that we have that's only going on for one more week.
And we have quite a lot of chats to show as well once Stelios is done.
Awesome.
Stelios is doing the macro for us, and since he doesn't like to talk about himself, I can tell you one thing for sure, is that he's not a technical trader. I mean, it's not his main thing.
Yeah.
But I don't remember ever seeing him fail in one of his macro views, and he takes long-term positions and with low leverage, and he always gets it right in the end.
Well, not always, but yeah, okay.
like huge percentage of times.
Hey guys, can I say something about Dotard? I was trying to bite my tongue, but just in case there are members in our community that have special needs relatives, or I know I had I have a sister that I had to go to bat for when kids were calling her a retard. It's basically a derivation of it, and I like Kim Jong-un less than ever now. So Rocket Man is pretty benign compared to dotards, and if you've ever had someone you love be in that position and have them be ridiculed for it, you might feel the same way. And I may not be the only one in this community that has had that experience. Thanks, guys.
Absolutely, Dave. Absolutely.
So so basically what Steve is saying is right. I'm a macro trader, so I take a view based on fundamentals. I use technicals for entry and exits, but I'm not as good as the other guys because this is not my core competence. And I use very low leverage. So that's how I trade. Now, why do I think sterling is bullish? I personally think that, first of all, the move that sterling did after the referendum was huge. It was 15% roughly depreciation versus the majors. I think that before anything has actually happened, okay, there's a lot of uncertainty. It just all went and got straight priced in. And when I see markets extended that way and position in the sentiment as well, it's usually a trigger for me. And I personally think that they're going to reverse the rate cut they did after the referendum, which I thought was uncalled for. And it didn't really do anything to the economy, really. It was just a way of signaling. I think they're going to reverse it in November.
In essence, the logic is that the sterling went in and priced in that Brexit would be completely catastrophic for the UK economy. on the other hand, is not pricing in a lot of risks for example, if the EU, if we're talking about the euro pound, because that's the trade Stelios has had on, and this is a lot in the money at the moment, while it was out of the money. And the whole point and the whole concept is that the market, as usually, jumps into extreme positions and conclusions that didn't make sense fundamentally from the point that the UK economy hasn't shown any real slowdown yet. Oppositely, the depreciation of the pound has been pushing inflation higher, which means that the BOE is one of the central banks that is about probably to start going on a hiking cycle unless something happens, and that is something that the markets were not pricing in at all since a while ago, and that's why you saw this very strong move, because the market was still pricing in like more easing, and suddenly the market woke up to a reality, which is that not only there isn't any more easing coming, but more likely than not, we're going to see them hike rates and do it rather soon. Okay, so
now the question, I guess, is where do you get out? I think if they do hike in November, which it's 50-50 right now, I think they will do it. Then I think the market is going to move a lot, and that's a place where I'm going to start taking off positions, maybe half of it or something. So just something to prepare people for if it happens or when it happens.
Okay, and we have a lot of questions, so let's go over them. KCPI Lucas says keeps coming down. BOC may be kind of done for a while. Pound CAD looking good. I totally agree with you. Pound CAD has been looking good and has confirmed the reversal since some time ago. Unfortunately, it's not giving us a pullback to buy into. I mean, even today, if you look, we were looking into that we were probably starting a correction lower, and we've already retraced more than half of the losses we had intraday. So I'm still looking for some kind of a pullback in the pound CAD to buy into, and I'm still crossing my fingers that we're gonna see that. Now I have questions about the pound Aussie and the pound Kiwi. Listen, having to do with the pound Aussie, I like today's candle. I like the fact that we're getting rejected from here. I'm hoping that we're going to see some kind of a pullback down here, to get involved with that as well. I'm long the pound Kiwi somewhat, and currently it looks like somewhat, I said, because as I said yesterday, I only have 1/3 of my regular position, but how it looks like now, it might be within a triangle. So, consolidations, you cannot in advance know exactly how they're going to evolve. For the time being, it looks likely to be a triangle. If that's the case, if this proves to be a triangle, then I'm not expecting a drop lower, just a little bit of a consolidation over time before we push higher. And keep in mind, the critical level for pound Kiwi is this trend line here, which is at around 189.50, okay? Because a break above it is going to prove that this whole structure here was a big bottoming formation, and that's going to then point a lot higher, and it's going to open the door to much higher prices. So for me, I would like to see something like that. Okay, so this is what I'm looking for in the pound Kiwi. In simple words, I mean, another push higher from the triangle, a failure, an initial failure, perhaps at this trend line is going to turn a lot of people bearish. Then if it proves to be a correction, I think that we will decisively break above it and head to new highs. But let's not jump the gun. For the time being, I can tell you that this looks to me just like a bullish consolidation after a very strong bullish move. Perhaps this was a 1, a 2, a 3. This is going to be a 4th wave, another push higher for a 5th, etc., etc., etc. You get the point. I'm still constructive. In the short term, we might get some pullbacks or whatever, but I'm still constructive. It still looks very, very good. And as you understand, as Blake has said, we're on a critical level in the cable. This might also be a triangle, by the way. So we might not get a pullback towards there, and we might just get some choppy price action here.
Or we might get a third drive to a top.
Yeah.
I mean, you have to look at the 4 hour.
Yeah.
To do
Sure.
that.
For example, to the 61.8, which is at 138.30 of this whole move from the Brexit high, for example. Why not? Yes. But this, I mean, look at this. This is impulsive. I mean, whenever you see parabolic moves, you know this is a wave 3 of some kind, okay, and it's impulsive. So 1, 2, 3, 4, 5. I mean, technicals tells me that it's likely that we're going to get a push higher from here, or if we move lower after the May's comments, next week we're going to get a push to new highs. Okay, so I see a lot of people doing the mistake of trying to predict how a macro event is going to happen just because it would make sense, it would bode well with technicals, but I have to remind the people that you cannot know in advance the nature of a consolidation of a little correction. So, for example, yeah, sure, can May's comments be interpreted bullish and break directly from there? Yes, that's not going to make me like a magician. Oh, he said that it's going to break higher, because we might also see something like this, like a move lower to test a triangle, and then next week higher, or we might even see a move lower to test this ascending channel resistance and then higher. Simply then we will have to redraw this consolidation, and the consolidation, let's say, might end up being whatever, like a bull flag. It might may end up being something like that, because you don't know exactly how the price action is going to evolve from this point on. But what I can tell you for sure is that for the time being, this very little price action we've got since we stalled here doesn't give me any signal that's bearish, like, oh, it's reversing hugely and this is a top or whatever else. I mean, I still believe that more upside is coming. Let's see if it's going to be from directly here or from a little bit lower. Okay, so I think that from a technical perspective, simply from a technical perspective speaking, there is absolutely no question that the cable remains well bid, and it should. Okay, by the way, for whoever didn't see, we wrote, Blake, Stelios and I, we wrote a blog post yesterday. Let me put the link here. This does not say that the dollar is reversing. I'm going to put it here in the message for whoever of you hasn't seen it. This says that if the dollar reverses, which we still need confirmation because this is the dollar index here, and we still don't have confirmation, these are the setups we're looking for as good opportunities to be long the dollar. Okay, we're making very clear here in this blog post that we don't have confirmation yet, but this is what you should be looking. These are the setups you should be looking to be long the dollar once we get confirmation, and we explain exactly which are the levels that are going to give us confirmation. So I think it's worth reading, and I'm also going to be making a blog post about the Swiss pairs during the weekend. So let's go to more questions. Euro yen, do you agree on a short setup here? Okay. Personally, no. In what sense? It's not that I don't see the opportunity of it working out. It can very easily work out. The question is, if I see indeed a good shorting opportunity of the euro yen up here, is that I'm not jumping the gun. I'm not the same kind of trader that Blake is. Blake is often jumping the gun, and he knows how to do that very, very, very successfully. I can show you a 4-hour chart. This is what I see on a 4-hour chart. So yes, I do see momentum loss here. We even had the possibility of an ascending wedge. So I do see some momentum loss, and I do think that it's likely that we're going to get a move lower from here, but I don't know where to put my stop loss, because I can't exclude another push higher. So I wouldn't be shorting the euro yen yet, but I'm a different type of trader. Somebody else might be doing it as we speak, and they might get good profits out of it. But no, this is not my type of trade because I don't have multiple confluences that I want to have when I'm trading counter trend. Okay, and I'm not the kind of person that would be short and then be looking to take like 20 pips of loss or 20 pips of profits if I see that it doesn't work, etc., etc., etc. I like to stay in the market longer. So, given what I just explained, the answer is no, I'm not looking into shorting it. Okay, I still don't have confirmation that anything has changed and that it's not still bullish. I confirm though that I see some momentum loss. I also see RSI divergence. So some signs are there, but not all the signs I would want to get involved with. Pound CAD. Yeah, we will show it actually. You want me to say it in more detail? Yes, pound CAD. I was monitoring the descending wedge, we broke it. I was monitoring the descending channel, we broke it. And we also broke this confluence here. So in my mind, there is absolutely no question that this thing is now bullish. Question, would you buy it here? No. Where would you buy it? Hopefully closer to 164. So unless I see it down there, I'm afraid that I can't do much about it. Okay, a retest of 164, I would be buying both hands. So that's what I think about the pound CAD. Yes, DAX. About the DAX, let me be clear about the DAX. Nothing has changed. This is exactly what I had drawn back then. We had talked extensively about it, of the break above the channel, etc. And I see absolutely no reason to be bearish. I think that at some point it should pull back. I think that any pullback to 12,400 or even 12,330 is a good buying opportunity, and nothing has changed for me. I still think it's going to push higher. Okay, I don't have any evidence of the opposite. I mean, I just see a strong uptrend. I saw a very clean channeled correction, and I have no reason not to treat the new move higher as a new impulse to new highs. And that's how you should act in these cases. And in the vast majority of the occasions, you're going to be right than wrong. I mean, I'm just looking at the direction of the trend, especially when you see something that's clearly a corrective move. You should keep looking in the direction of the trend. And I think the way it has broken out and the way it's not even providing us with any serious pullbacks is another testament to that, the fact that it remains bullish. Aussie USD. Actually, I'm going to be selling Aussie USD likely today because it's back testing now this ascending wedge. So thank you for reminding me. I'm going to probably sell Aussie USD. And one of the reasons I'm going to do it on a Friday evening is the following. There are a lot more chances that something might happen during the weekend that the Aussie USD is going to gap lower than that something is going to happen and it's going to gap higher. So I'm more or less convinced that I'm going to short it at some point during the next few hours. That's what I see. So I mean, I'm clearly more inclined to look to the downside than to the upside. Okay, and to the Kiwi, obviously the Kiwi looks less clear, but still in the Kiwi, I still see what so far is just an ABC correction, like ABC. So Kiwi looks more likely to resume lower than not to me at the moment. This choppy retracement higher is has all the characteristics of a correction. Okay, so Kiwi, I'm also inclined to believe that it's more likely to move lower than anything else. Yes, I agree with you, Luca. Kiwi has also the elections, so better left alone, 100%. Hello, Andre. Nice to have you here. It's a good idea to use trade management software. Yeah, Rob, thanks for reminding me. Actually, we are going to embed to the ForexAnalytix platform by Christmas some extra tools. One of them is going to be a risk calculator, because Rob says it's a good idea to use trade management software that calculates your risk for your trades. And by the way, this is going to be a thing we're going to be adding to the ForexAnalytix platform within the next 2-3 months. Amir says that he thinks that May is going to resign. Amir, I think that politically May is weak. So I also believe that one way or another, the only reason she's still the prime minister is that I believe that other politicians do not want to be burned by being involved in the whole Brexit negotiation. So they would rather have her, take all the blames for whatever doesn't work right and claim the leadership right immediately after the situation has started getting more clear than anything else. So I think that May would have already stepped down or replaced after the catastrophic elections she called, and actually in a sense lost, because she did it to come out stronger, and she came out weaker. So I think that yeah, she's not going to be with us for much longer. Once things clear out a little bit with Brexit negotiations, I think she's going to be replaced. Gold and silver. No, we didn't cover it yet. So yes, let's have a look at it. Do we have a guest today, by the way, Dale? Okay, gold is back testing the 1300 level. Obviously, this area is very strong, and it has proved so in the past. The fact that we broke below it, is not good, but okay, it's just one day. We're currently holding the 50 DMA. Honestly, I don't know what to do with gold. I would have loved to have bought it at a test of 1300 if we didn't slash through it like it wasn't there. But it never stopped at 1300 really. So I really don't know. I'm not convinced yet that shorting it is a good idea. But on the other hand, unless it clears back again, 1300 level, I'm just staying away from it. And having to do with silver, I also have a level in mind I would like to buy, but still I want to see a reaction from there, and that's 1670. It's this area actually here. So I would like to be involved with silver, but I want to see some reaction from this area. And we're going to know, obviously we're going to know about this within the next few trading days, so probably during the next week. Now, having to do with indices, because a lot of people are asking about the US indices. Listen, the most interesting one from a technical perspective at the moment is NASDAQ. Why? Because NASDAQ has created this triangle. Usually these kind of triangles are bullish, and they point to a continuation of the trend, but so far we have failed multiple times to clear above it. So things are quite clear here. We either push higher above the triangle, in which case I expect, at least a move towards the 161.8 resistance at 6,145, or we close below here, in which case it shows that some kind of a correction is going to start. So I think we're going to know very soon, because in essence the levels I'm looking at is like 6,010, and to the lower side it's like 5,870 roughly. So any break below this or above that, I think is going to extend a move in either direction. So I think NASDAQ is going to produce a trading opportunity, and it's going to do it rather soon. Okay, so I'm closely monitoring. SPX, on the other hand, is pulling back. I had said since like weeks ago that for me, after we broke above this channeled move, first of all, I was convinced we're going to see new highs, and I said that there are two areas I have in mind. Is the 127.2, which we tagged exactly to the pip, which is at 2,510, and the other one was the 161.8% extension at 2,535. we are stalling from the first area, but we still haven't even broken below the breakout level. So although I could tell you that, yeah, okay, it's a good sign that we have stalled from there, I mean, on the other hand, you know, there's no technical damage done. I mean, it still remains bullish. So not only that, it failed to respond to the Fed, which somebody would expect that the Fed's hawkish stance should have done a lot more damage to stocks. It barely responded to the new threats with North Korea, etc., etc., etc. I mean, this thing is broken. It's like artificially bid. No normal market would have stayed so well bid with so much risk on the table and so overvalued, you know, stocks. I have to tell you though one thing, and I showed that to the chat room yesterday, and for me that's very, very important, and that's Apple. Okay, this is Apple. This is Apple stock. You can even call it a head and shoulders formation, but we definitely had a gap to fill at 150, and Apple seems to be breaking down from this ascending channel as well, if you see. So I think that's a bad omen here. This confluence of you know, this support resistance zone and this ascending channel, the fact that it's breaking down, it's a bad omen for the market, and you know, I'm paying very close attention to it, and I see the possibility of a move lower from here. I mean, I do see a lot of technicals pointing lower. Even if you see IWM, it might be trying to put in here some kind of a double top. If you see also at the Nikkei, look what Nikkei did yesterday. We had been monitoring this ascending wedge for a long time. We expected a correction lower to there. This scenario never played out. The first one played. We got it, and then we got a new push higher, but this now has yielded an evening star formation right on the retest of this ascending wedge support, this time as resistance. So I see a lot of signals here that we may get some type of a correction in the vast majority of the indices. And you know, I'm waiting for Monday. Also, the FTSE broke down of this level and came back to retest it and is pushing lower once again. So, you know, I see the possibility of a move lower in indices. I need a little bit more of a confirmation.
Okay, Steve, we have a guest today, so I think it's probably time to pass it on to Dale.
Definitely. I asked Dale, but I never got an answer.
It's okay. Sorry.
Dale?
Great. Yep.
Are you unmuted, mate? Okay. Okay. I thought you might have been muted by mistake because I asked you for a guest.
Okay. Well, we do. And
Okay,
before we
great.
do, so thank you, Steve. Sean, I see you in the house, so I'll get to you in a minute. Before I do, I just want to talk about a couple of things. The most important thing being that we have this change of seasons happening here, and to celebrate the change of seasons, we have our seasonal promotion going. And you know, my belief is that every day is a good day to subscribe to ForexAnalytix, but I believe Fridays are especially good because they'll give you a couple of days to get familiar with the website and the platform and give you time to prepare for next week. Here's a look, and Greg is looking at for the Dixie for another low here. You know, and if that's not your cup of tea and you want to know what Nick's thinking, here's Harmonic looks, right? And then we have Steve and Blake here on basic technical. So you get Blake's looks. So this would be a great time. You have Stelios's macro looks on it. And here are your candlesticks. And I just want to show you guys what the specials are. You're saving 30–40% on subscription fees signing up here. So 1 month, that's 2 for 1 actually. Buy 1 month, get 1 free. buy 6 for the price of 4, which also gives you the trading room after face closes that's active 24 hours a day. More because we do have people from all over the world, and buying 12 for the price of 8. So this would be a good day for you guys to consider signing up. I think it's a good investment for your fall trading season. And with that being said, I'm going to pass on the baton to a friend of mine, John Campbell at FX_operator. I've interviewed Sean, I believe, 2 or 3 times on FX Street, so it's been a while. Welcome to Face, Sean. Looking forward to hearing your voice, seeing your charts, and catching up with you.
How you doing, Dale? Can you hear me?
Yes, very clearly, Sean. Thank you so much for joining us after a long, wild week. How are you? I'm just waiting. I see your charts now. So, Sean, for people that don't know about you, and you know, I have a theory that to be a great trader, you don't have to be famous. And that means, you know, you don't have to have a million Twitter followers, but there are diamonds in the rough. Always considered you one. You were kind of a mentee of Rob Booker. That's right, Rob Booker. And I haven't talked to you for a while, so your handle's at FX_operator. How have you been operating, and how have things been going for you since we last talked?
Man, it's been a while. Yeah, it's going good, Dale. It's been, like you said, the market's been pretty crazy, but it's been a crazy year for me personally. I mean, it was one of those years that I kind of had to, or at least several months that I kind of had to step back and take stock of what I was doing and how I was doing it, and come back a better trader. I don't know if you've ever had those moments, but it's been one of those years for me.
It's quite normal. And what led up to it? Experiencing drawdowns that you said, I have to go back to the drawing board and stop trading. I think, you know, to stop trading and reassess is prudent. So was that what led into it?
No, it wasn't even really drawdowns. It was actually the sort of the understanding that I was putting myself at too much risk, and the way that I was going. So I didn't even have to get to the drawdown phase where I was like, okay, this is stupid, because I knew that what I was.
Yeah. Well, you know, it may have been. I remember talking to you, Sean, and we were on the verge of a breakout in the euro, and you said, I wish the euro would break out already so I'd have something to do. And, you know, sometimes when we're in range trading, quiet basing markets, most traders try and force things and try and make more out of even more than what the market has to offer to them. So what changes did you make after your reassessment?
So that's a great question. So basically what I was doing before, and I was doing really well at it, but I did what I think a lot of us just sort of kind of gravitate to at first, right? We fade trades, or we fade moves, and we try and say, this price is too expensive, or it's moved too far, or whatever reasoning, you know, technical or fundamental or whatever reasoning that we have for it. We work the opposite side of the market, and sometimes it works, and if you're very disciplined, you can do it, but sometimes that's really dangerous. So what I was doing before,
you were consistently looking for turning points.
Absolutely. Yeah. I was looking for, so let me just show you here just real quick if you want me to.
Yeah, I do.
I was taking moves like this, and can I use the pin on here?
Yeah.
Let me see if I can do it. It doesn't seem to be letting me do it. So anyways, okay. I'll just use some lines. So I was you know, basically looking for places that I call continuation liquidity, where probabilities change in terms of, you know, when moves break out of those areas, kind of like your 3 drives kind of idea. When it breaks out of that move, there's the probability shift, and it moves towards not going in that direction anymore. And it works a lot, and then it doesn't work a lot. And So basically what I've done is I took this and flipped it around, and instead of trying to trade against this move, I now trade with this move, and I have, you know, I like to think of it like geyser moves, right? Like you get all the buildup, and then you get that one move that takes you through the liquidity, and that's where I want to be in. And so I basically, I can't even tell you how hard it is to change around habits and mentality. That's probably the most difficult thing I've ever tried to do is
it's a
learning
new
about
paradigm.
charts. Yeah, learning about charts and learning about price is not that hard. Learning how to flip
Change
around
a
how you look at a
habit.
market.
Well,
Yeah,
you're changing a habit.
That's difficult.
Yeah. Takes repetition and practice.
Oh man. And then it does take new learning of the charts. I mean, it took me a lot of time to develop how I wanted to trade and how I was comfortable with it, because the other thing was before I wasn't using stops, right? I was just managing and doing a lot of different things. Now I'm, you know, 100% stop in the market, and just managing myself a lot better. I'm not there yet. I mean, I'm no market wizard yet, but you know,
Who is?
I'm trading a hell of a lot better than I was before.
So anyway, not using stops, you know, I've been there too. You know, I have a joke. I say, last time I used a mental stop, my first stop was a mental institution. So, so now that you've made this shift and you're more going with the flow, curious as to, you know, what we're seeing here. You know, the trend in the dollar has been down, down, and we're trying to put in some type of turn here. What are you thinking in the dollar here? What would get you positive the dollar for a trend change, or you're going to have to wait for the trend to change with your new style and then look for the first pullback to buy?
That's exactly right. That's what I'll do now. And I have a very, like right now on this daily chart of DXY, that line that I have in right there, 93.36, that's where I would say that, you know,
It's like a bull bear line.
Exactly. That's where that's where the stops are right now. I would say that's where the structure's at, however you want to say it. I call it the structure. And if that line gets violated, then I would expect to see a move that happened like this, pull back to where it came from, and then you'd get a move up towards the 200. But I don't. That's how I view it. Okay, that's how I see. I call it V principle now. I see these moves. Okay, you got this move that breaks down the low.
Right.
You got it breaks the low. So that point where the new low, the origination point of the new low is my, you know, bull bear line or my structure line or whatever. And so until that line goes, you know, one of the hardest things that we do as traders is to, you know, we look at this chart and we go, well, I can't sell that. It's been sold for, you know, 6 weeks now, or 8 weeks, or however long you want to
8 months.
say it.
Yeah.
You're like, I can't sell that now. Well, that's exactly what, you know, the institution wants you to believe, is that you can't sell it now. But until it actually shows you something, until it actually says, man, I'm moving up now.
I like the method. Actually, you know, you'd be buying a B or a 3 in Elliott terms, and there was a guy around when I was a commodity broker who made a lot of money selling a very simple system, calling it a 1, 2, 3 bottom, and basically that's what it is. You let the first wave take place, you buy the retrace, and you risk the low. So, you know, it doesn't have to be complicated. I actually think that's a great method because, you know, if that pullback works, that's your first high or low.
That's exactly right.
You have defined risk, and then you also, usually on those waves, they're usually larger in magnitude than the first move off the lows. They're usually some type of fib extension of it. So,
that's exactly right.
So, I wish you a lot of success with this, and good luck with a new paradigm. And I also think that it's commendable because a lot of people just don't want to change. And I know I've had to make several in my career and in trading, And, you know, I have W.D. Gann's statement up there. If you don't learn how to change your mind, you won't have any change left. So congratulations on being able to reassess what you were doing before. And
yeah, because,
yeah.
and here's why I did it. Here's the basis of why I did it. Because I was, you know, as a retail trader, as a pure retail trader that literally has, you know, access to, you know, Twitter and no other real information, right? I had to figure out a way to take what I see in price and take the subconscious of years and years and years of price and say, okay, what am I fighting? Why am I fighting it? And how do I change that? And I used to do a lot of my own analysis that really didn't lead anywhere. Okay, it was a bunch of time spent on things that were like, okay, well, if this happens, then this happens, and this happens, and I'd spend hours doing it, and I'd end up with no trade ideas, right? I'd end up with no actionable concepts that I really believed in. And so now, you know, now I basically get to the point where I say, okay, you know, I always wanted, and I think I told you this before, I always wanted trading to just be work. You know, I just wanted it to be something that was, you know, I hate reinventing the wheel every day and being like, well, you know, maybe this, maybe not. I want something that's like, okay, when this happens, do this, and then do this, and then do this. And that's how, you know, for me, that's the only way I'm going to have success in this over the
Let me ask you this. Prior, were you glued to the screen and watching every tick? And now, can you detach? Can you detach a little bit more so you could live a life using this?
Yeah. So, and that's, man, we're gonna get down a road here, but yes, absolutely. I can do the analysis and determine in 15 minutes in the morning if any pair, excuse me, is, because I trade only FX, and I can determine if any pair is that I watch is where I want it to be, and if it's not where I want it to be, I get to detach and just, you know, I want to be, you know, an entrepreneur and other things in life. You know, I want to do other things. I'm, you know, look, all that chart time is sexy when you start out, and then you do it, and you're like, man, what am I doing? You know, I'm missing out on a lot of life here. So,
so do you set and forget now, or do you, you know, there's kind of middle of the ground. You know, some people will set and forget their entry, stop, and objective. I kind of like to be around for the entry, to finesse the entry. But then once you're in, you know where you're wrong and you know what you're looking for. Staring at the screen doesn't change your destiny.
That's exactly right. And so I'm like you. I'll sit around for the entry, absolutely, because things can change very quickly. Because most of my entries, so what I do on the FX charts is I look at this 4 hour for context, but all of my trades come on a 15-minute chart. So I'm actually trading, you know, basically a 4 hour move based on a 15-minute chart. And so I find my entry, I make sure it enters properly, and then you
manage it you enter on a 15 and you manage it from a 4 hour.
Yeah, and so the,
you know, I actually teach that because, you know, if you manage it from a longer term time frame, you're not going to, you know, filters out a lot of the noise, makes it easier to sit, right?
Yeah, and so my targets come in on a 4 hour chart, and my stops in on a, you know, it sounds ridiculous, but I get stops in on a 15-minute chart and my targets on a 4 hour chart, because I know where this is going to go. I just have to find the right entry and you know, let it just manage itself after that. That's really the goal. Okay. My worst habit right now is over managing the trade while it happens. I still have a lot of that like over anxious stuff. Like in profit, take profit.
First daylight syndrome.
Yeah, exactly.
You don't want the profit to get away, you get out, and then the market runs, and you know.
But that was that was a habit, right? That I learned counter trend trading, because if you got a little bit of profit, you freaking take it and you go, you know. And so now that's probably the last real hurdle I have to get over to make this.
Well, let me help you. Trade multiples and trade out a half for small money and give the other piece a chance.
Yeah, there you go.
Give peace a chance.
Give peace a chance. I love it.
Which is pretty, you know, timely.
Yes.
So, do you have any things that you're looking ahead for today or into next week that's on your radar screen? Not necessarily something to execute today, but
sure. So
look ahead a little bit as to, and do you have biases, or it's strictly the trend is your bias?
So strictly the trend is my bias, and the trend gets broken down into two pieces. Okay. The trend, you know, in anything for me, whether I'm looking at an index or a pair or anything, is the 200 exponential moving average above or below that, and then this wave, basically this 3 moving average wave that I use that is way more sensitive to price movement, and it gives me this crossover, and now I go from being long-minded to being short-minded and taking my trades in a different direction. And it's real, I mean, on this one, it's really easy to see that turnover and see how it can be useful. And so, you know, again, breaking it down into sort of the difference, the move down above the 200 is still good, but it's less good to me than the move down below the 200, if that makes sense. So move up.
So the euro pound trading where it is right now with the possible little double bottom pattern, would that qualify because you got your first wave up and you're putting in a higher low?
So what would happen here was, back 4 days ago was actually the best trade scenario for what I do. And now it's still, I still have to consider this a sell because it's below the 200 and the wave is down. I still think, I believe that this double bottom is just, you know, for me, it's like your Twitter handle, right? You're a stop hunter. I believe that they're going to hunt stops down in this area at some point in time. And that's largely what I, you know, because of this point right here, that daily low on the 15th, I think that they've manipulated this to show that, oh, we're going to put in a double bottom here.
Yeah,
and then
so that's a hope low. That's like a hope low down there.
Correct. Yeah, and that's what I call continuation liquidity, is when it's like this move right here, right? You put in this move, it pulls back into the wave, and then you get to push through it. And so that's what I predicate all of my analysis on. So
okay, Sean. So
yeah, I would still be a short on EG. Now, granted, if I drop down to a 15-minute time frame, it's kind of ugly. So I move on from it and find something better to do, or just wait. You know, I right now, if I just look across the pairs, if we just look across the pairs, I've got Euro US dollar still above the 200 and working to try and make a new wave up. So this could be long territory. It's not my favorite because of all the price action that we've had lately. So it's probably just a neutral range for me and not really what I'm looking to do. Pound, I actually have an order to buy. I have a buy stop in the market right now for pound dollar.
Where?
So if we drop down, so you can see how we pulled down into the wave again today.
Yeah.
I'm aiming for this point up here, and my buy stop right now on GU is, well, I got to move this little control for go to meeting. So it's at 135.92. Because this was an origination point and a slingshot move that could push you up through the highs.
Okay, so let me ask you this, Sean. It's been a while. Besides trading your own account, you have any business model going now where you're working with other traders, teaching, collaborating, or strictly you're in your space capsule just trading your own account? I know you have other interests. I know you're a high school football coach.
Oh man, I love coaching.
Yeah, so I in fact they call me that, coach. So I like being called a coach. Do you have any kind of business model that you're working besides you trading your own account?
So right now I do have a website that I have, and I have a video series up for this exact stuff. And I I kind of put together a Saturday morning get together once a month for anybody that would want to learn more about how to trade this. Other than that, I really want to get to the point where I'm, and this may sound crazy, but in the world of sports and athletics, there's trainers, right? And I think that where the world of Forex kind of goes wrong sometimes is that they focus so much on the chart time, they don't focus on the rest of the mentality and the issues that come along with that. And that's where you being a coach comes in and allows them to, you can't really help somebody if you don't see them work. And I think that as I move forward, I want to take what I can do here and what I'm doing now and be able to translate it to somebody that, maybe they want to trade full time, maybe they want to trade as a second job, something that they could look at in the morning and set and go, go live life and be successful other places too.
Okay. That's a cool goal. And the best way, you have the website, you want to show the website so people can see it?
Yeah, sure. And I'm actually, let's see here. Let me bring it up real quick. Sorry, I wasn't planning on showing the website.
And people could also follow you at FX_operator.
Yeah, and I have a blog too that I like. I love to write and talk about trading, talk about the life lessons in trading, and that's tradinglifeownit.com. It's just a little blog that I throw together and write on there pretty regularly. Sorry, I'm still bringing this up. 1 second.
Okay. You have time. Here we go.
So this is the website, and it's really easy. It's just, if you want to see the course and the videos and the Saturday morning thing, just click on FXIT Tools, and the other part of it is the coaching side of it and the private training. So yeah, I don't know. We'll see how it goes. I love to trade. I think that the coaching, I love to coach football, so I'm trying to meld the two a little bit. So we'll see what we can do with it.
Have you had your first game yet?
Yeah, so we're 2-1, and we got a game tomorrow night.
Oh, congrats! That's a good start, buddy. So
yeah, not bad.
I want to thank you so much for showing up and sharing your story and admitting that sometimes we all have to go back to the drawing board. Even because, how long have you been doing this now? About 5 years?
So yeah, FX has been almost 6 years now.
Okay.
Almost 6 years.
So
yeah.
That's pretty decent, guess. So that means even after years, you still have to, it's an ongoing process. If we're not growing, we're dying. And I hope that this new way for you will take some of the stress out of trading and pips rain down on you and your family, Sean.
Thank you,
and
sir.
Thank you very much, my trading warrior brother. Everyone, thanks Sean Campbell.
I appreciate it, Dale.
Go ahead, Sean.
FX_operator.
There you go. And how does Sean decide where to create his boxes? So you could go to Sean's website and he'll show you. So people are thanking you, Sean. So
I
again,
appreciate
have
it.
a great weekend. Go kick some butt.
Yes, sir.
On the football field, no turnovers. Take care of the ball.
That's right.
I also want to thank everyone in FACE for, I hope that we're adding value to what you're trying to accomplish as a trader. And most of all, my trading warrior brothers and sisters, don't just count your pips, count your blessings, sign up for ForexAnalytix, and get prepared for a great and wild trading season this fall. So have a great weekend, everyone. Welcome to a new season. And let's kill it. Thank you, Sean. Adios.
Thanks, Dale. I really appreciate it.
You're very welcome, my friend. Thank you, Steve Volge and Stelios and Blake and Grega and Nick and all the guests that we had this week, Anna and Sean, and wow, what a lineup. So we had a great lineup of guests. Hope you guys enjoyed them too. And we're going to do it all over again, God willing, Monday, if Rocket Man behaves himself. All right.
Man.
All right, guys. Have a great weekend. Adios. See you, buddy. See you, Blake. See you, Steve. See you, Stelios. See you, Face. You're welcome, Andre. Looking forward to our interview with you. Looking forward to the interview. Anna was in here. So a lot of people we interview like hanging out with us. So come to the place where pros trade, ForexAnalytix. See you, everyone.